What is going on, crypto fam? Welcome back to Bitcoin Bulletin, where we break down the biggest stories shaping the future of digital finance. The news cycle is absolutely wild right now, and you do not want to miss what's happening. We've got updates that could redefine how assets are managed, shifts in major financial players, and data that tells a critical story about where we stand. Stick around, because this is the information you need to stay ahead of the curve. First up, are governments playing it safe with their digital reserves? We're diving into a groundbreaking move by El Salvador to protect its Bitcoin holdings against future threats. Then, we're shifting gears to explore a potential seismic shift in the political and financial landscape as a prominent family makes a significant crypto push. Is this a sign of broader adoption or something else entirely? Following that, we've got crucial on-chain data that could signal a major turning point for Bitcoin's market sentiment. Is the coast finally clear, or is this a calm before the storm? And finally, a massive development in institutional adoption as Bitcoin gets a bank-style makeover on one of the world's most famous stock exchanges. You absolutely have to see this. All that and more, right here on Bitcoin Bulletin. Don't forget to smash that like button, subscribe if you're new, and ring that notification bell so you never miss an update. El Salvador's bold move, fortifying Bitcoin reserves. El Salvador has just executed a significant strategic maneuver, fundamentally altering how it secures its substantial Bitcoin treasury. In a move lauded by many in the digital asset space as a forward-thinking approach to security, the nation has transitioned from a single, continuously reused wallet system to a diversified model. This overhaul involves storing the country's Bitcoin reserves across several distinct addresses, with each individual address now holding no more than 500 BTC. The National Bitcoin Office confirmed this significant change on August 30th, signaling a new era in the management of national digital assets. The Salvadoran government has articulated that this redistribution strategy is not merely a procedural update, but a direct alignment with what they describe as global best practices in digital asset management. More critically, the move is presented as a proactive measure to address long-term concerns surrounding the potential impact of quantum computing. Government officials have explained that the theoretical capabilities of quantum machines could, in the future, pose a threat to the cryptography that currently protects Bitcoin keys. This possibility raises profound questions about the long-term security of digital wallets and the assets they hold. Previously, El Salvador's operational model involved relying on a single, frequently reused address. This practice, while functional, had the inherent drawback of making the public key permanently visible on the blockchain. This constant visibility effectively grants potential attackers an indefinite window of opportunity to attempt to breach the wallet's security. The newly implemented system is designed to circumvent this specific risk entirely. By spreading the nation's Bitcoin holdings across multiple, as yet unused addresses, the government aims to minimize exposure. Furthermore, they are publicly publishing the list of these addresses to ensure transparency and maintain accountability, allowing for verification of the diversified holdings. The Bitcoin Office elaborated on the rationale, stating that limiting the amount of funds in each address significantly reduces exposure to potential quantum threats. They emphasized that an unused Bitcoin address, with its hashed public keys, remains protected. The vulnerability arises only once funds are spent from an address, at which point its public keys are revealed and become susceptible to computational attacks. By segmenting the funds into smaller, isolated amounts, the potential impact of any future quantum-based attack is theoretically minimized. Stacy Herbert, who heads the National Bitcoin Office, has characterized this strategic decision as both a precautionary measure and a demonstration of leadership. She stated, "El Salvador was the first to establish a strategic Bitcoin reserve, and we continue to lead the way on establishing best practices for this era of true sovereignty and freedom money." This sentiment was echoed by industry leaders. Nick Newman, co-founder of Bitcoin custody firm Casa Hodl, praised the move, calling it an encouraging example of how large-scale holders can anticipate and prepare for future technological threats. Great to see large public BTC holders taking proactive steps to protect against future quantum threats. El Salvador continues to be a good model for how nations should manage Bitcoin treasuries, Newman commented. This development arrives at an interesting juncture, following recent commentary from the International Monetary Fund, IMF, suggesting that El Salvador's Bitcoin holdings had not significantly increased, with most activity involving internal transfers rather than new acquisitions. Nevertheless, the nation has continued to announce new Bitcoin purchases, bringing its total holdings to 6,284 BTC, valued at over $681 million. As of the latest reports, these funds have been distributed across 14 new addresses, a testament to the new diversification strategy. President Nayib Bukele has also hinted at potentially increasing the nation's Bitcoin reserves to approach $1 billion by the end of the year. Hold on tight, because the world of digital finance is far from done with its surprises. Next, we're diving into a story that might just shake up the political landscape as a major family makes a bold entry into the crypto arena. Trump family enters the crypto arena, a $1 million Bitcoin bet. The political and financial worlds are buzzing with a new development that could significantly impact the perception and adoption of cryptocurrencies. The Trump family is making a notable push into the crypto space. This strategic move, spearheaded by members of the prominent family, signals a potential convergence of traditional political influence and the burgeoning digital asset market. The venture involves exploring avenues within the crypto ecosystem, raising questions about the family's long-term vision and the broader implications for Bitcoin's future valuation. At the heart of this initiative is the idea of leveraging the family's considerable public profile and business acumen to engage with the cryptocurrency market. While specific details of their crypto holdings or investment strategies remain under wraps, the very act of such a high-profile family diving into digital assets is seen by many as a significant endorsement. This could, in turn, attract a new wave of investors who are influenced by celebrity and political figures, potentially boosting adoption rates and market sentiment. The underlying question being debated is whether this move is a genuine belief in Bitcoin's potential or a calculated business opportunity. The narrative gaining traction is that the Trump family is betting on Bitcoin's ability to reach a staggering $1 million valuation. This is an exceptionally bullish target, far exceeding current market prices and historical peaks. Such a bold prediction suggests a deep conviction in Bitcoin's long-term value proposition, potentially driven by factors like its increasing scarcity, growing institutional adoption, and its role as a potential hedge against inflation. The family's involvement could provide the necessary momentum and visibility to challenge existing market narratives, and perhaps even influence regulatory discussions surrounding digital assets. However, this ambitious outlook is not without its skeptics. Critics point to the inherent volatility of Bitcoin and the speculative nature of such high valuation targets. They argue that while high-profile endorsements can drive short-term interest, they don't necessarily guarantee long-term stability or sustainable growth. The history of cryptocurrency markets is replete with examples of boom and bust cycles, and the involvement of political figures can also introduce a layer of complexity, potentially intertwining financial markets with political agendas. The regulatory landscape for digital assets is also still evolving, which could pose challenges for any large-scale venture. The potential impact of the Trump family's crypto push extends beyond just market valuation. It could influence how mainstream America perceives and interacts with digital currencies. If their venture proves successful, it might encourage more individuals and families with significant public influence to explore similar paths, further legitimizing cryptocurrencies as a viable asset class. Conversely, any missteps or negative outcomes could have a chilling effect, reinforcing existing skepticism. The market will be watching closely to see how this high-profile entry unfolds and whether it truly lives up to the ambitious $1 million Bitcoin valuation bet. Now that we've seen a major political family make waves in crypto, let's dive into the technicals. We've got on-chain data that might just tell us where the market is heading next. Bitcoin's MVRV drops to 39%, signaling a neutral risk-reward balance. After a period of intense trading activity, Bitcoin's market conditions appear to be entering a phase of consolidation, according to key on-chain data. Analyst Axel Adler Jr. has highlighted that the market value to realized value (MVRV) ratio, adjusted for cycle and volatility, has fallen to 39%. This metric is crucial for understanding investor sentiment and market health, as it measures the profit or loss investors are holding relative to Bitcoin's realized value. Historically, readings close to 100% have indicated overheated markets with high profit-taking risks, while figures near 0% have signaled capitulation, where most investors are at a loss and selling pressure has waned. At the current reading of 39%, Bitcoin is positioned comfortably between these two extremes. Adler's analysis suggests that the market is no longer in an overheated state, nor has it plunged into panic-selling conditions. Instead, the current environment reflects a more balanced risk-reward scenario, with the MVRV metric not generating strong bullish or bearish signals. This neutral stance implies that Bitcoin might be entering a consolidation phase, a period where the market absorbs previous volatility and prepares for its next significant move. For short-term traders who thrive on explosive price action, this neutral phase might appear frustrating, as it suggests fewer opportunities for dramatic gains or losses in the immediate future. However, from a long-term perspective, such neutral readings have historically served as a foundation for more robust and sustainable upward trends. When the market isn't excessively hyped or in a state of despair, it allows for more organic growth and less susceptibility to sharp corrections. The current MVRV level suggests that Bitcoin's price action may remain within a range until new catalysts emerge to drive a decisive breakout. This period of consolidation is a natural part of market cycles, allowing for the digestion of previous rallies and the building of support for future advances. The significance of this metric cannot be overstated. In past bull cycles, Bitcoin's MVRV often soared above 70–90%, inevitably leading to sharp corrections. Conversely, during deep bear markets, the metric would dip below 20%, presenting prime accumulation opportunities for savvy investors. The current 39% reading suggests that neither extreme is currently at play. This implies a market that is neither excessively greedy nor excessively fearful, a state that can be conducive to steady, long-term accumulation. This on-chain analysis comes at a time when Bitcoin's price action is also being watched for chart patterns. Some traders have noted the formation of a potential double top pattern just under the $124,000 resistance zone, a pattern that can sometimes precede a price reversal or a period of consolidation. The MVRV data reinforces the idea that the market might be entering a period of sideways movement, allowing these technical patterns to play out without the immediate pressure of extreme market sentiment. It's clear the market sentiment is leveling out, but what about institutional adoption? Get ready, because Bitcoin is about to get a major makeover on the Nasdaq. Bitcoin gets a bank-style makeover on Nasdaq, igniting institutional adoption. A significant development is set to reshape how institutional investors interact with Bitcoin, as the U.S. Department of the Treasury, in collaboration with major financial institutions, has announced the launch of American Bitcoin, ABTC. This new asset, designed to track Bitcoin's price, began trading on the Nasdaq Stock Exchange in September, marking a pivotal moment for cryptocurrency adoption within traditional finance. Nasdaq is positioning itself as a central hub for digital asset trading, aiming to bring enhanced transparency, liquidity, and regulatory compliance to the market. The core innovation behind ABTC is its structure, which provides investors with a one-one exposure to Bitcoin. This means that for every share of ABTC traded, it is directly backed by an equivalent amount of Bitcoin. This approach allows investors to gain exposure to the world's leading cryptocurrency through a familiar, regulated stock market environment, without the complexities of direct Bitcoin ownership, such as managing private keys or navigating decentralized exchanges. The listing is a direct result of the U.S. Securities and Exchange Commission's (SEC) ongoing efforts to develop a comprehensive regulatory framework for digital assets, bringing much-needed clarity and security to the space. Nasdaq has underscored its commitment to facilitating secure and efficient digital asset trading by implementing a dedicated technological infrastructure. This platform is built to adhere to the rigorous compliance and risk management standards already in place for its traditional financial markets. Key features of this infrastructure include real-time settlement capabilities, advanced order types designed for the nuances of digital asset trading, and a robust cybersecurity framework to protect against potential threats. This signifies a major step towards integrating cryptocurrencies into the mainstream financial system with the safeguards expected of major exchanges. Market analysts are expressing optimism about the potential impact of ABTC's listing on Nasdaq. They anticipate that this move could unlock significant inflows of institutional capital into the cryptocurrency market. Such capital injections could not only drive broader market participation, but also contribute to greater price stability for Bitcoin, mitigating some of the extreme volatility often associated with digital assets. Furthermore, the Nasdaq listing is widely seen as setting a precedent, potentially paving the way for the listing and trading of other cryptocurrencies and digital asset-based products on major global exchanges in the future. The announcement has generally been met with positive reception from investors and financial experts, who view it as a strong validation of Bitcoin's increasing significance in the global financial landscape. It signals a growing acceptance of digital assets as legitimate investment vehicles. However, some persistent concerns remain, including the environmental impact associated with Bitcoin mining operations and the ongoing challenges in fully resolving regulatory ambiguities. Despite these lingering issues, the listing of an asset like ABTC on Nasdaq represents a monumental milestone in the journey toward the mainstream acceptance and integration of digital assets. And that's a wrap on today's top stories. We've covered a lot of ground, from national reserve strategies to market indicators and major exchange listings. Stay tuned for the outro. All right, crypto crew, let's do a lightning recap. El Salvador is diversifying its Bitcoin reserves to guard against quantum threats. The Trump family is making a significant crypto push, with some betting on a $1 million Bitcoin valuation. Bitcoin's MVRV ratio has cooled to a neutral 39%, signaling a balanced risk-reward market. And finally, Bitcoin is getting a bank-style makeover on the Nasdaq with the launch of ABTC. That's all for today's Bitcoin Bulletin. If you found this information valuable, do us a huge favor. Smash that like button, subscribe to the channel if you haven't already, and ring that notification bell so you never miss an update. Also, make sure to follow us on all our social media channels for more real-time insights. We'll see you in the next one.